Hi, folks. Dan Bird here with the daily scan for Friday, October the 10th. And has the sell off finally begun? Big down day today after Trump announced more tariffs on China and China becoming more hostile with rare earth um, metals. So we'll see. Could be temporary. Well, we shall see. Probably won't know until Monday, but let's take a look and see what the charts are telling us. So first, I'll take a look at the 10 minutes, and then I'm going to look at the longer range charts. It is 2:30 in the afternoon on Friday on the East Coast. So there you can see it. Actually, we had a gap up in the morning, interestingly. It's a big green candle first thing in the morning. As I've always said, the first hour till 10:30 or so is volatile usually. It's usually the time when they usually call it amateur hour. So right after that, big institutions started fading the market. This is probably where the news came in right there on China tariffs. You can see money flow headed down, but now it's starting to move back up a little bit. So right now we've got kind of a rounded bottom. We'll see how it ends the day. That's going to be really important. But I suspect we're going to go into the weekend with a big red candle today. Technology is down considerably. Discretionary has continued to go down. Communications is actually moving up slightly today. That's interesting. Let's look at defensive. Defensives should all be up, and they are. Staples, utilities, much higher. Real estate, higher. And the cyclicals, financials, pretty much flat. Healthcare is up. Industrials starting to move higher. Materials started to go up. And energy is pretty much flat for the day. And then looking at the rotation, this is the important one. Growth versus value, definitely rotation out of growth and into value. Right now it's sitting right on the zero line. Discretionary versus staple has been continuing to go down ever since Monday. So every day this has gone down, and today is no exception, going down even more. But more importantly, the one area sector that has been holding the market up is now kind of collapsing. Technology and semiconductors and transports also are heading down as well. Breadth, there you can see it. S&P right now is below the 21. That is a key level. You can see that it's gone below the 21 previously, but usually it's the next day, it's always bounced back. So we'll have to wait till Monday to see what happens. But if that doesn't happen, if it continues, then we may be starting a pullback, a healthy pullback, I might add. But breadth is getting much weaker. So percentage of stocks below the 20 is below 50%, 50 is below 50%, and the 200 now is at 59%. So it's heading down to the 50% level as well. Bullish percent index I talked about a couple of days ago. So you can go back and look at that, and I said it looked weaker back then. Here is the Russell 2000, looks the same as the S&P. Money flow is starting to move back, but actually money flow is still negative down here. So this also is slightly above zero, but it's actually not too bad. It's a little bit weaker than the S&P, but mid caps and small caps are starting to make a little bit of a comeback. So might even be an interesting entry point for the Russell right here. It might actually do better than the S&P. So let's take a look at breadth. You can see same thing, 20, 50, and 200 falling apart. The mid caps are down considerably. Small caps are down below the 21 as well. They keep going down, and the NASDAQ 100 looks the same thing. Little move up in the morning, big sell-off. That is a falling knife. Then we've got blue bars, which are all neutral, basically. But look at the up volume versus down volume, significantly lower, as well as the advancers and decliners. I mentioned this yesterday that the NASDAQ looked like it had a lot more decliners, even as it was trying to make a comeback. So now it's pretty much fallen apart, and the VIX right now is above 20. So that's where bears come in. And this actually is even steeper. So you can see this is the NASDAQ 100. So the percentages is the same as the number of stocks. In this case, below the 20 is 31 stocks. Below the 50 is 44 stocks. Below the 200 is 55 stocks or 55%, and it's not quite at the 50% level, but bullish percent index is rolling over. So everything looks very negative. I think it's going to stay this way into the close and probably will carry over the weekend. We might even get a huge gap down on Monday if things don't change over the weekend. So be aware, be careful right now. All right, let's take a look at the longer term charts on the market bias page. We'll look at the S&P first. S&P, there's that big red candle and it's at the bottom. So if it ends like this, the end of the day, that means it ends at the low, which basically implies that it could have gone lower except the market closed. It's heading right down to the expected move. Expected move is at 65.80. It's right now at 66.08. So it's only 28 points away from the expected move. This is going to change. The expected move will change. I usually update this on Fridays. So next week is options expiration, a week from today. So it's going to be very volatile next week. I think the Max Payne report for next week might actually be accurate. So Max Payne means if the market has been going up, then the Max Payne, or the place where market makers stand to lose the least money, is if the market comes down and all of those options expire worthless. So this is implying perhaps next week that we're going to have more of a sell-off. Would not surprise me at all. If it stays like this, especially near the end of the day, then a lot of this is where I usually am getting out when it crosses the 21 moving average. Look at the VIX down here. VIX is up higher than it's been for the last 4 months. So the VIX is spiking. That is definitely sending us a message. Let's look over here. Well, let's look at the NASDAQ first, then we'll look at Bitcoin as well. Same thing, big red candle below the 21. It is going towards the expected move line. RSI, money flow rolling over, and VIX is much higher. We look at the Russell, same thing. Russell is now below the gamma flip line, and this is what I've been waiting to see what happens. What this is supposed to mean, and I've only just started tracking this. So usually what it's supposed to mean below the gamma flip line, it means things can accelerate in whatever direction it's heading. So if it's heading down below the flip line, then it can actually accelerate much faster below that line. So this is implying it's going to continue. Would not surprise me if that happens. You can see momentum continually going lower, getting ready to go below zero up here. Big volume today as well. And the RSI and money flow is also now sitting right on the 40 line. So if it can't hold this line right here, which doesn't look like it's going to, then the acceleration could actually increase to the downside. So be aware of that. It's 240 right now. There's still time to make moves in your portfolio for the end of the day. Here's Bitcoin, same thing, big, huge red candle below the 21, sitting right on the trailing stop line, the chandelier exit right there. That's this dotted green line sitting right on it right now. So below these are all signals to get out, at least move to the side or lighten up or put in some hedges, move your stops up, whatever you decide to do. Now, the uptrend is still intact. So one thing I want to talk about with the uptrend and something that I added to the website, and we'll talk about this tomorrow. I mentioned this real quick. For subscribers, I'm doing a Zoom call tomorrow at 2 p.m. Eastern time. The Zoom link is right here. So this is on the main page, so anybody can see this. But to get to it, when you click on this button right here, it actually takes you over to a protected page. This is only for subscribers, but this is the Zoom link right here. So sometime before 2 o'clock, click on that. It's an interactive open session. Ask any questions you want. We'll look at charts. We'll look at anything that you want to look at. They typically run for 2 or 3 hours, depending on the question. So every subscriber is welcome to join. All right, let me show you also on the same page, webinars and newsletters, that I just added 2 things here. I've been watching these really good Jesse Livermore YouTube videos. And it's actually pretty fascinating because it's actually taking his words, Jesse Livermore's words, and it makes it look like he's actually saying them, but he's not, of course. And it's taking a lot of his concepts and categorizing them. So right now, the money is in the waiting. I talked about this one earlier this week. The one I just watched is the #1 reversal signal. Really good. These are really good videos to watch. Of course, you can find them yourself if you want to go out on YouTube. For subscribers, you can just come here and click on it. I'm probably going to create a whole Jesse Livermore page because there are a lot of these out there now. But what he says on the #1 reversal signal, the way to know that the market is beginning to decline or starting into a longer extended pullback is there's three things to watch. Let's do this. I'm going to do this with the Magnificent Seven. 3 things to watch. First of all, the market continues to make new highs. It goes up in a stair-step pattern. So the hallmark of a bullish trend is higher highs and higher lows. So it'll make a high, it'll come back and make a low, but it won't be as low as the previous low, and it will continue to do that. At some point, it will stop making higher highs. So it will try to get back to its previous high, but won't be able to do it. And it will start to move down before it takes out that previous high. So that's warning sign #1. Warning sign #2 is when it comes down and makes a new low, and the new low is lower than the previous low. That's warning sign #2. And if it then continues to go down from there, then you know that the whole complexion and character of the market has changed and is starting to move down. Now, #1 is this is for all the leaders. The leaders usually will break first, and then the other stocks, the smaller stocks in those industry groups, may continue to rise, but they will eventually break as well. So these are all the leaders, except for 2 that I want to add to this list, which is AMD and Oracle. They're not on here now, but I will likely be adding them. So let's look at each one of these. These have been all the leaders, and see if they are no longer making new highs. That's the first thing to watch. We'll just start with Google and we'll just go from there. All right, so there's the high. Here's the next high, and it's moving down. So it now has a lower high. I've actually put lines in on each of these of where that final line in the sand is. According to Jesse Livermore, when he knows that the market character has changed from a bullish characterization to a bearish. So #1, is it struggling to make a new high? You can see obviously Google is. It's not getting back up there. #2, will it move back down to its previous low? And #3, will it break that previous low, and will it break it decisively? So just because it goes below it, now this could actually close above this low, which then means we may not yet be in that downtrend. It could recover and start to move up. But if it decisively breaks this line right here, that's where that previous low was. You can see back here, there's a high, here's a low, there's a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, lower high, and then will we make a lower low? So that's what we're going to be looking for. There is the line to watch. If it closes, it's actually moving back up right now. It's 2:45 right now. So we've got an hour and 15 minutes left. If it actually closes above this, then we get a reprieve. But we should continue to watch that. So I'll go through the rest of them now that you know what to look for. You should see this line on all these charts as well. Here's Amazon. Big red candle today. There is the line in the sand right there. This is what's going to tell us that the market is getting ready to have an extended downtrend. There's Apple. Apple's is pretty far down there. Here's the trailing stop line. That is the chandelier exit right here. Look at that back here on Amazon. So it's already below a chandelier exit on Amazon, and Google is sitting right at it right now. All right, let's take a look at the rest. There's Apple. There's Meta, big red candle there. It's below its chandelier exit, below the 21. So that is not a good look. But this is the level here. This is the line in the sand right down here, 690. All right, here's Microsoft. Microsoft has a little ways to go still, sitting right on the 21, and the chandelier exit is below that. So here's NVIDIA moving down today as well, but still looking good. So NVIDIA is actually was starting to make lower highs and 2 lower lows, but then it reversed and went back up. So higher high, higher low, higher low, higher high, higher low, higher high. It has not yet made a lower high. So the second thing to watch for has not yet happened on NVIDIA. There's Tesla, same thing. Tesla's line is actually a diagonal support line right there, right about at the 50-day moving average. Netflix, way down here. So Netflix now, it may be putting in a lower high. That's what it looks like might be happening on Netflix. Here's Broadcom. There's a lower high on Broadcom. Here's Costco. There's the trend line right there. Low, you can see these are lower highs on Costco, continuing to move down, sitting right at its 21. Next is Palantir. Palantir actually is a lower high, but it's kind of a sideways movement right here, but still has not taken out its previous high. So that's the key. But on this one, it's a diagonal trend line as well. And that's all the way down here at about 160. So that's where that could go. Right now it's at 178, roughly. Arista Networks. Now this one has not yet made a lower high. So this one is still in a good, solid uptrend. So we'll continue to watch it to see if it does make a lower high. And Eli Lilly is making higher highs still. So Eli Lilly has not yet made a lower high. So most of these look like they are following a pattern to potentially have a change of character, but it has not confirmed that yet. That is the really important thing to think about. It has not yet confirmed it. So continue to watch those. We'll watch them here every day. I'd like to go down and take a look at, let's look at Bitcoin real quick. See Bitcoin, still big red candle. So it's continuing to go down. It's at 117 right now. The 50-day moving average is down here at 14.5 roughly. So, and that's where this diagonal trend line is. 14.5 looks like the target of where it could be headed to. The big question is, are the buy the dip folks going to step in? And we don't know that yet. We'll see what happens by the end of the day. These could all reverse by the end of the day. And then over the weekend, everyone will have a chance to think about it. And we'll see what happens on Monday. Monday is going to be really important. So let's go back here and go to the charts page. I want to look at the volatility chart first. So here's the VIX. You can see right here, the S&P is below the 21. The VIX is, this is the 1 month VIX is the gray line, and the pink line is the 3 month VIX. So right now, since this is going much lower, you can see the VIX is way down here above 20. This is going much lower. That means the longer term VIX is underperforming the short term. So short term, we have much more volatility. So that continues to go lower. We'll look at the VIX itself on the VIX chart over here. And this will also include, so there's the S&P. There's a huge bar on the VIX. Started off down here at 16.25 roughly. Now it's way up here. See how it ends the day, but it's way above 20. In fact, right now it's at 21.46, 21.50. So the VIX is telling us that volatility has picked up. The 10-day moving average of the put-call ratio, I suspect this is going to start moving up as well. 10 years still dropping, interestingly. So this is all related, I think, to the news about China tariffs. That could easily cool off over the weekend, but we shall see. Right now, this is telling us that the market is poised. I mean, it didn't need very much anyway to roll over. Let's look at the 50 and 200 day stocks. Here's the put call ratio right here. So here's the percentage of stocks for the NASDAQ. Above its 20-day, it is at 30%. So it's definitely below 50. The 50% level is the key one to be watching. You can see they both the 50 and 20 have been just hugging that 50% line. But now it looks like they are breaking down significantly. This one's at 43%. The 200-day is at 56, so not quite below the 50 yet. But as these continue to go down, and if we do get an extended downtrend, then this will help us to identify where the bottom is. And that's when we get a big sell-off like we did back here in April. This is what told us that the bottom was in April. So that's what we'll be looking for. You can clearly see it right here. There was the bottom, and there was percentage stocks below the 20, 50, and 200. So when they get down to these lines right here, that's when the bottom is in, but this could be just beginning. The next support level is the 50-day. So we'll see if it can hold that. Lastly, I'll look at the MTS strategy, which I will update all of this after the close tonight. So this has been moving along really nicely. It's in the long position. These two boxes here tell you what the bar looks like. So right now it is in neutral. It's got a blue in the middle with a red on the outside. That means it is a down neutral bar. It means it's coming off of a green, and now it's getting a blue neutral. It's not yet red, but it was telling us yesterday that this is changing. So if we look at the daily for the VTI, this right here would be an exit. So this one would go to cash if it stays like this, especially right now. It's actually right at the chandelier exit. It's sitting right on it. If it closes below that chandelier exit, then this will move to cash. That's on the daily. The daily moves faster. These little orange lines right here is tracking Turner Capital, which has a very similar system. I think their minimum entry is $1 million to engage them and let them actually trade your capital. You can see mine has actually stayed in the trade longer than theirs did. Mine, in this case, I would be out on the daily before they would, but they track everything on the weekly, which is really what the long-term trend is on this tracking system. So if we look at the weekly right here, they would be out right here at about 315, and mine would be out at about 312, 311 right down here. But still got a long way to go before that gives you a go to cash signal. So that's what it looks like right now. I mean, looking at the weekly chart, this is really not much of a down move. Still sitting above the 8-day. So it could easily bounce off of this on Monday and head right back up again. So we'll see. We'll see what happens over the weekend. All right, be safe out there, and let me know if you have any questions, comments, anything you'd like me to look at. Be happy to do that. And right now it is 2:56. So let's go back and look at, let's see where here's the NASDAQ continuing to go down. So it's not moving off of that level. Let's look at the 10-minute charts. It's actually moving lower. Now it's got red bars. Here's the Russell now has red bars too, so it looks like it's moving lower. And the S&P right here, S&P has red bars as well, continuing to go down. So we'll see how it ends the day. That's going to be really important. All right, thanks for watching. Stay out of trouble, everybody. Have a great weekend. And hopefully for subscribers, I look forward to seeing you tomorrow. Take care.